Everyone and their mom is refreshing their Twitter feed, panicking over the Nikkei and Korean stock market crash. I'm your host, Erin, and I'm going to help you how to survive these and what we're going to do about it. Let's get started. As an ex-finance lead of GE, I always question what is going on because there's always rippling effects to the economy. We talk about the last largest financial crisis, which was 2008, the anatomy of global contagion, decoding systematic risks through commodities and capital inflows. We are going to talk about a commodity, which is the leading indicator of the whole global economy and how we are functioning and doing. Now, in general, let's talk about 2008. We all remember subprime mortgages. The equity was an absolute. So many people had to rebuild their lives. The US market lost 40% of its capitalization. International markets even lost more. UK losing 49% and Russia. This is as a whole, but if isolated to specific sectors, which is Trader Foundation's specialty, and we are hosting a live masterclass where you can also isolate just like Wall Street. The link is below. The financial sector hemorrhage. Global financial sectors suffered devastating disproportionate. US lost 60% just in financial sectors alone. We all remember Lehman Brothers. The UK lost 66% and Russia 70%. Now, this goes across borders. It's never just contained in the US. It's always like a domino effect. Now, look at this. Like in this chart, US, Russia, China, everyone had a catalytic event and had to have recovery. Now, the commodity that is always functioning and leading how the economy is doing. Right now, the Trump administration is saying the economy is good, but really feel it because every single ounce of data that we are getting is always delayed. The overall arching feeling, UPS just had thousands of layoffs, Amazon, Google, all the banks. These are not just normal, these are white collar jobs, high paying jobs. AI is taking over and there are signs that there are cracks in the economy and we are seeing it and we are feeling it regardless of whatever the narrative is telling you. Your job and my job is to tell you to really think about it. Copper is always needed for every single industry. Electric vehicles, AI data centers, there's always a demand. And copper's demand right now, if you look at it on the charts, which I'm going to show you, it's showing signs of, we had a 22% in COMEX futures in one day. So it's showcasing that the economy is in a very fragile state right now. There is a shocking policy right now also going too, which is the reason why we're seeing the Nikkei dropping, the US funding stress, everything is converging into the larger catalyst at hand. And we are showcasing systematic risk in the overall markets. And we're seeing it in this strange, large volatility that is showcasing right now. We are being told with the news that the economy is good, inflation's going down, the job market is good, but is it really? Amazon just had thousands of layoffs, UPS, big banks, Wells Fargo, JP Morgan, Google, all of them had record layoffs. On top of that, people are having to search in the job market for months. I have some friends that they have been looking for a job for over a year. They can reference that, push all the narratives that the job market's great, everything is stable, but reality, you can also see it in the charts, which is what I'm going to show you right now. Retail is cheering on for the fact that the Korean stock market has, gone up 12% in a day. However, we all know that there are such things as dead cat bounces, which is really what we're seeing. If you look at this, the way the candles have shown, we dropped 20% in a single week. Now, looking at this is not healthy price action. We always see, liquidity being made, that is one of them. On top of that, and the Nikkei is also still completely down. It's down 14% from highs. And it is really trying to defend for dear life this right here. If we pull up Dr. Copper, we can see also it has been dropped 23%. Now, looking through here, we're seeing this drop. It's not healthy. We are just consolidating, but we are not in healthy price action. Now, let's pull up DIA, which is the Dow Industrial Average. As of the close right now, we are down 7%. We have closed below the 20 MA. That is one sign. The other thing too is this is a market structure shift. This trend is now broken. We've touched the 20 MA and usually defend it. The fact that we didn't defend it should have everyone in retail alarms ringing. Wall Street is exiting. Now, the last time we touched it was back in November 2025 and we defended it. We completely have confirmed now that we are now in a downtrend. Bull markets do not create new lows. We did. The fact that also we teetered for quite some time is also another signal. Typical retail mentality, thinking, oh, we're bouncing. Yes, we have buyers. We closed below, closed lower. Volume is there, yes, but the close is lower And on the larger time frames, which is the weekly, market structure has shifted. If we pull up the Qs, we are in this absolute messy chop zone that we're seeing right now. These wicks means that there's fighting going on, buyers and sellers. However, again, look, we have not been able to close above the 20 MA for weeks. The longer that we consolidate, the larger the move, and it's looking more so like, if you look at this, it looks like kind of inverted, a rounded bottom. And if we're looking at this, like more so signs of bearishness. On top of that, the Bollinger Bands are constricting, which means a large move is happening. Now, the DIA has already fallen. On top of that, if we pull up IWM, this has also broke down below the 20 weekly MA and with definitive volume. And if you pull this up on the daily, this does not look good. The Bollinger Bands, like we consolidated for quite some time, and now we have dumped. Liquidity is being made. Now, with the close of the weekly being like definitive that we have broke. Last time, November 17th, 2025, that week, we moved upward. However, there's a few things that I want to, point out. The volume is stronger. This one is not a hammer candle. This is an inverted hammer candle with definitive volume. So now we have a few sectors. IWM breaking down, DIA breaking down, QQQ holding on for dear life. And then now let's look at the SPY. The SPY has also broken down. The weekly is closing below the 20 MA. How much longer before the Qs do the same thing? We have already 3 out of 4 of the indexes breaking below the 20 MA. Now this is where we call the distribution phase. We accumulated back in April 2025. Now this looks like the distribution phase, especially now market structure has shifted. I had this filmed previously in another recording, but unfortunately my file got corrupted. We call that Spotify in our community, and out of the whole market madness, Spotify is a banger on the weekly, and it's calling out exactly what we started and said it was going to be. So you can see I even had this prepared. A+ as it gets. If you want to understand how we even spotted this setup, join our masterclass that we're hosting March 14th, as well as like and subscribe to this community.